In this video, we are going to discuss about the intraday stocks for 7th January 2022 and the day would be Friday. So today we will start with Bank Nifty. Today was the 6th Jan expiry and there are some important things we need to discuss that whenever there is such a big move in consecutive days, then there will be some profit booking, and today is just that, a halt candle or an inside candle. So this is not, it doesn't mean it's a bearish, it's just a healthy correction. Now I'll go to 5-minute chart and I'll show you. See, you have to understand the psychology of the market. Now yesterday market closed around this level, so people went home shorting Bank Nifty here. Then next day, immediately it opens with a huge gap down. That's when people who shorted here would like to book the profit. And that is why the market shot up immediately. Then sellers came and dragged the market down. But one thing you should note that after this candle low is taken out, it didn't fall much and went up. Now this is not how market falls. Now if we go back, then we can see that this is the way the market falls. Whenever market falls, this is the way market falls. Market falls very sharply whenever it needs to fall, but when it needs to go up, it goes up slow and steady. So today whenever we saw that in smaller time frame market is not falling, or market opened gap down because of a panic scenario, but if the panic has to continue, it should continue and when should have gone lower, but it did not. So it just made kind of a W pattern and went up. And this is the time I posted in Telegram. If you are not in the Telegram, then you can join Stock Market Ritual. You can see that at 10:07 a.m. I shared this, that it is making kind of a W pattern, so market may go up. So you can see that's what it did. It made a kind of a W pattern and went up. Then it went up and it maintained kind of a trend line and took support constantly on the trend line. So this was a high, this is higher high, this is higher high. So it continuously went up. So it was a clear uptrend. And now today is the expiry. So many people have done short straddle or short strangle here. So they have sold both call and put for making some profit. Now today when it opened gap down, what happened? The price of call fell drastically while the price of put went up drastically. But how much the price of call will fall? The price of put went up much beyond that. So there was a discrepancy, and these people's, the smart money that we call, were in huge loss. So then what happened? So now the put premium is high. Then the buyers came, or the put sellers came and took the market up. So the put premium went up. So if you consider this position of tomorrow's close, then from here, the call position and put position, the call went down, the put went up. So it slow and steady went up. So now the call premium also got eroded, the put premium also got eroded, and it closed exactly near this level where it closed. So both the call and put premiums went near to zero. So that's where it got maximum profit, those who have made a short straddle here. So that is a typical expiry. On a daily chart, this is what the candle looks like. Here the call sellers came, took the market down. Here the put sellers came, took the market up, and it closed somewhere in between, so that call and put gets maximum eroded. So that's what happened. It's a typical expiry, and you can see that we also did the same thing. In yesterday, I said that sell Bank Nifty 37,700 call, 37,700 put for 6 January, and there was obviously some hedges here, but we did the same thing. So many people who have done this would make huge profit, and it is a stock market premium group. To join this group, all you need to do is open an account in Upstocks with us, with the following link given in the description below. As soon as you got your account open, we will add you to this group. And here you can see we are constantly trading since 9th December, and since the last week we are making constantly profit. Now this is based on one lot. This is based on one lot of trade, and you can see in the last 8 weeks we made a profit of around 12,540 in just 8 weeks. So we are continuing this, and I will post the link to this sheet in the description. You can go and watch yourself how much we are making profit here, and you can also join. We will help you there. When this breakout happened, I gave 37,500 call to buy at 15. That went up to 250. So that was a big trade, and you can see in the stock market ritual group is a free group. You just need to join this group. Now see, 37,500 call buy at 15. I gave at 17, and the stop loss was 0. Then you can see, or it went up to 250. Now I said exit now or keep SLR 20 and let go. So the options bought at 15, it went till 250. So that's a huge profit we made. Now every week this will not happen, but whenever this happens, we make sure we capture it. So you can join to get this type of analysis and calls, and we don't charge anything, so you can just join. Anyway, we are coming to the 1-day chart, and you can see this is what exactly looks like. The call seller took the market down, the put seller took the market up, it closed somewhere between. Now what happens? It may consolidate a bit further between this range before it breaks out. So until and unless it breaks out this level, no further buy will come, and 38,000 is a good resistance. So we have to wait until it crosses 38,000, because if it crosses 38 and sustains there, 38,500, 38,800 is the next target we can have. So coming to 15-minute chart, tomorrow what we can do, if Bank Nifty opens within this body of this candle, it will come down in the first 5 to 15 minutes, but it is going to face good support at these levels. So tomorrow if it opens anywhere flat, it will come down, but in the first 5 to 15 minutes it will come down, but immediately sharp buying will come, and the candle may look like this. So now if the candle high is taken out, we will buy with 50 to 60 point stop loss, and our target would be this high, and this high can come 37,750. But if it opens gap down, then it will be volatile between 37,750 on the upside and 37,000 on the downside. So that's what tomorrow's market looks like. So if it opens with a huge gap up, then it can cross this level, we can buy. Otherwise, if it comes down, we'll look at price action and we will trade with a view of range. Now coming to Nifty. Nifty also did the same thing. It opened gap down, and from there it came further low and then went up and closed somewhere in between. So this is the candle that I was talking about, the typical expiry candle. Now in 1-day chart you will see that this is kind of the same candle. Now one thing to note is that this was the breakout level. So it broke out. Here also you can see that it made a big move. So now it needs to come down a bit little to continue its up move. So this was the breakout level. So it broke out, took support here. Now if it goes up and crosses this level, then further move will come. 18,000 is a strong resistance that I told in yesterday's video. So this will be respected for some time and market may be volatile. If this crosses, then 18,200, 18,250 level will come. But tomorrow what we can do is immediately if it opens flat and starts going up, we will buy with 20 to 25 point stop loss, and our first target would be 17,800, and this gap needs to be filled. That is 17,920. May not it come tomorrow, but in Monday or Tuesday it may come this level, and if no bad news further hits the market. But if it opens with a big gap up and crosses this level, then also we are going to buy. The only problem is when comes gap down, then we'll look for a range bound market between 17,800 on the upside and 17,580 on or 17,600 on the downside. So this is the range we are going to look at if Bank Nifty opens, if Nifty opens gap down. So now let's look at the stocks. The first stock is GAIL. You can see that from here up after making a base, it is continuously going up and it has given a fresh breakout. Now it is be stretched, it needs to come down a bit before going up, but looking at the candle that these levels may come, so we can have a 4 to 5 point profit if it comes in a momentum. So if tomorrow it crosses 140, we are going to buy with 2 to 3 point stop loss and 5 to 6 points will be our target on the upside. The next stock is TVS Motors. You can see that it has kind of made a W pattern and given a breakout and is going up. So we can expect some further up move. These levels may come. If it crosses 650 tomorrow, we can buy with 3 point to 4 point stop loss and 7 to 8 point will be our target on the upside. The next stock is Tata Chemical. You can see it is a very volatile stock at this moment, but it is from here it has established a lower low. Now if it continues its fall, then these levels may come. Below 902, we are going to sell, keeping a 5 point stop loss and 10 point will be our target on the downside. The next stock is Pfizer. This is also one volatile stock, but is continuously making lower high. And looking at this moment, it seems that its lower high is established and it's also making an M pattern. So if it is resting around the neckline. So if this is crossed, then we can expect some fall on the down. So below 5010, we are going to sell Pfizer, keeping a 10 point stop loss and 20 point will be our target on the downside. So that is for today. I hope you enjoyed this video and thank you for watching.